Now, how can you be positive on equities? I know that it's been probably a reverse psychology up till now with what's going on out there with the possibility of a second wave of this pandemic in various corners of the world.
It's always good to be here. Look, to be positive equity, there are so many things to be positive about equity about. Now, first of all, equity has never looked so much cheaper compared to the fixed income and the like. If you want any return, any yield, any income, or even any growth, you have to go to the equities. Now, looking under the surface in terms of the equity market, for some sectors that's been impacted by the virus, the lockdown and the like, they are trading at some of the cheapest valuation. And these include some of the companies that has premium assets and some of the businesses with the highest quality business strategy and business model, and now trading at a fraction of the price before coronavirus impact. So, actually, equity market has ever been so exciting. And for some of those businesses, these opportunities probably once in a decade sort of buying opportunities.
Jun Bei, though, we've got geopolitical tensions certainly at the forefront, and it does seem like the war of words, in fact, the war of actual tit for tat, is getting worse between Beijing and Washington. Now, is this really being played out on equity markets? It doesn't seem to be. And why are investors living in Pollyanna?
Look, this certainly brews some risk for the equity market. Now, at this point, equity market is focusing on how we recover from this coronavirus disruption. Now, geopolitical issues will become a bigger issue as we head towards November during election. Hence, by then, the volatility expectations will be higher. But for now, it's about reopening, about how we can get on with our lives and return to normal level of activity.
Well, that could be a way off, couldn't it, Jun Bei? So what is next? What are we looking at with regards to perhaps asset allocation within equities? Are we seeing a move at all from growth toward value in any sense?
Look, growth seems to be selling off a little bit in the last few weeks. However, my view is that you always want to run a balanced portfolio. You want to have some of those structurally growing businesses because, when worlds become volatile, that's the only place you can generate return. And at the same time, you need to take advantage of short-term price disruptions for some of those highest quality asset owners, shopping centers, airports. You need to buy them because these are defensive assets. Once we move past the lockdown, you will see those delivering significant return over the next few years. So it's important to have both of them in your portfolio.
So we're looking at what? Healthcare, infrastructure. How does a balanced portfolio really look like? Give us a sense of that.
Look, you might laugh when I talk about it, but it is about a bit of everything. Diversification is so important in generating consistent return. You want to buy some gold because it offers great diversification. And even though some of the company has done so well more recently, you want to hold some growth businesses and you want to buy some of those asset play value businesses. So together, all three will give you a very good, consistent return through time.
Is there such a thing as a Biden portfolio as we look towards the November election?
Look, it's interesting. There's been some research done on what the equity market looked like. So far in the last few months, in the last month or so, we've seen a rally of defensive asset growth and defensive assets. They have outperformed value, like you said earlier, on a 1 month or 2 month view. Now, these are actually perhaps more, towards Joe Biden's portfolio. However, if we start seeing the odds turning towards Trump, you will see more of the cyclical portfolio to start outperforming, just given, the possibility of more stimulus, the talk of more stimulus and the like.
Jun Bei, the dollar is the most oversold in about 40 years. Is it time for some consolidation? And if that were to happen, would it hold back equities going forward?
Not necessarily. I think the dollar strength is a reflection of risk appetite. So if the equity market becomes stronger and people are more looking to go into the emerging market as well as the more cyclical names, you will see the dollar weakness, and that is a sign that global growth perhaps is, or expectations of it is potentially picking up. And on the flip side, if we have experienced a bit more volatility and nervousness about the length of the second lockdown, then you should see the strength return back to the dollar.